So we have some mixed signals from the American consumer. If you look at the numbers, retail sales rebounding in the month of January, but almost 5,000 stores are closing across the country this year. And we have the CEO of Fairfax Global Markets, Paul Dietrich, with us today, the president of Potomac Wealth Advisors, Mark Avalon, joining us, and the CEO of the SBE Council, Karen Kerrigan. And the other thing, Karen, to start with you is, if you look at the retail sales numbers, yeah, January bounced back, but we had confirmation today that December really kind of was a disaster. So which of those two do you think is more important?
Well, I think moving forward in 2019, sort of where we're headed, and the small retailers and the retail community that we talk to are confident about where they go, what 2019 will be. They have a pretty solid outlook. I mean, obviously there are some headwinds on the policy front they'd like to see resolved in order to give them a real boost of confidence and optimism. I think what really matters is going forward, and it looks like we're going to have another good year.
All right, so we'll put that in the rearview mirror for now. Paul, say, hey, it was one bad month. Confirm that it was, because a lot of people came out and said, no, it doesn't look right. But December really was tough. That means we had a tough end to the year. But do you agree with what Karen's saying, that the outlook here for the rest of 2019 for the consumer is pretty positive? What do you think?
I do, but let me tell you, those numbers, retail numbers, are really suspect. I mean, they came in lower than expected for Christmas sales that we knew were strong. They even lowered it further. And then you look at corporate earnings for the consumer discretionary retail sector, and it was up almost 15%, way above the rest of the economy. Also, 79% of these companies actually exceeded their earnings estimates. So something is out of whack,
well,
and I believe it was the close down.
Right, Paul's right on his numbers, I'm sure, Mark, but some companies individually are struggling. I mentioned coming in that we've had a number of stores closing down, which may speak more to kind of winners and losers in the environment than it does to macro factors in the economy. But what's your take?
Well, there is a lot of management execution issues at some retailers, and there's also a huge capital expense that retailers need to make to keep up with their clicks and bricks strategy or to compete with a Walmart and an Amazon. And that's what part of this shakeout is. We've seen this shakeout across the board. It's discounters like Payless, it's specialty stores like Gymboree, and it's retailers like Macy's. So there's nowhere to hide. The overhead associated with bricks and mortar real estate is incredible compared to how a lean online retailer can operate. And if they don't execute better, we're going to see more of the same going forward.
Right, makes sense. And Karen, you mentioned at the start of the discussion that we'd like to see more clarity in terms of policy. I got to assume, at least in part, you're referring to trade there. And is that, or is there more to it than that in terms of companies holding back on commitments they're going to make, spending, because they just don't know the type of environment they're going to be operating in?
Yeah, I think trade obviously is a big issue in terms of the impact on cost, and they would like to see clarity. Obviously, like to see the tariffs lifted, and in terms of China, some resolution to that, and a good deal moving forward in terms of market access, intellectual property. But also that will set the stage for getting that resolved. Will set the stage for hopefully passage on USMCA, because that's going to be a big lift as well. And there's a lot of trade across borders with Mexico and Canada. So, that's another big piece, again, that will provide some certainty and some clarity for the retail community. And then trade agreements moving forward to open more global markets to retail.
We've been actually doing pretty well, Paul, when you consider that that is something that has been kind of hanging over us for quite a while. I know there's been some debate about this, but the numbers, at least the studies that have come out the last few weeks on it, do show that the American consumer has taken a hit because of tariffs, companies passing along those costs. I know some say the Chinese companies are absorbing them, but it may not be to the point where some had predicted in terms of Armageddon and a disaster, but it's starting to hit us, and if it continues, you'd think that would only be a bigger and bigger issue. So how important is it to get all this resolved?
Well, I think it is, and I think it will be resolved. Almost everyone that I talk to in the trade area and who are working on this trade agreement thinks that this will be over within the next few months, certainly by the end of June. But I think the big issue is we've got full employment or near full employment. We've got wage gains of 3.4%, and among people at the lower end of that, it's even much higher. And so what are they going to do? Are they going to save that money and invest? I don't think so. I'd love to see that, but it's not going to happen. They're going to spend it. Retail sales are going to be good through the end of this year.
And then what, I guess, Mark, is the question after that?
Well, if we're hearing that argument, and I agree, if you're having strong wage growth and low unemployment and modest gas prices for people to get to the stores, and stores are closing, there is something structurally wrong with the retail delivery model, and the retailers are going to need to be very forward-thinking very quickly, because this story has been going on for years and it's going to continue. And I look for pressure in the REIT sector. I know you can repurpose these properties, but that takes years, and it's hard to replace all the square footage you get from a Sears or a Kohl's.
That's interesting. Paul, let me go back to you on that real quick, and then I'll go to Karen on it. But what do you think of that? That the that the real estate investments that we look at are something that could be a real kind of a casualty, or something we certainly should look at here if Mark's right and structurally we have an issue in retail.
There's no question about it. I mean, bricks and mortars, especially mall bricks and mortars, they're in their death throes. We're seeing a capitulation right now. They are going to have to repurpose all these buildings. It's going to be difficult. It would be a sector I'm not investing in at the moment, simply because of that.
Yeah, there's so much space, right? And go ahead. You wanted to make one more point, Mark?
Yes, and if you want to repurpose real estate and you're in a vibrant zip code, if you're where I am inside the Beltway in D.C., that's fine. Try repurposing a shopping mall 30, 40 miles out, where the economy is a totally different story.
What happens to them out there?
Well, what happens is there's no one going in those places.
Right.
Flex warehouse is a good way. Now, Amazon might save some of them if they can repurpose it for a warehouse, maybe some creative flex office space, but the retail there just can't survive.
Karen, what do you make of that in terms of the businesses that you talk to and deal with? That's obviously as a longer-term concern.
Well, it is, but the fact of the matter is that you have a lot of small, innovative retailers that are actually driving all this disruption, to begin with. I mean, they're, through personalization, specialization, authentic engagement, differentiated type of fulfillment, meeting customers where they are. This is sort of the reality of the marketplace right now, and the customers are king. So, but in terms of, I'm a little bit more optimistic, perhaps, in terms of repurposing, because I always think that, entrepreneurs will find a solution or be innovative with those spaces. So, but definitely there is disruption going on, and it's going to impact those real estate places. So
something to watch, no doubt. Karen, Mark, Paul, thanks to all three of you. Good discussion on all of this. We are up 155 on the Dow right now.